What's up, traders? Happy Friday. So today, all the talk and attention usually sits on either Bitcoin or Ethereum. Those are the top two players. But my favorite crypto always has been the one crypto I think really is a cryptocurrency because of its privacy, Monero. And it's sort of been sleepily moving up over the last few weeks. I may have jinxed it today because today it was down like most crypto, but I think people need to be more aware of it. Also, I'm going to use an example from the Discord this week to talk about when to take profits, some good ideas on that using Ichimoku and my spike indicator. And of course, as always, symbols that you guys want me to look at. Oh, yeah, and also going to look at some alternate investments like we did last week. We're going to talk about corporate bonds. What are they? Should we care? Are they better than just sitting it in a money market account? A lot of things we got to talk about here as everything is once again at an all-time high. So just stick around after the music and we'll get to it. All right, what's going on, folks? Looks like we're up and live again. Happy Friday! Thanks for joining me this Friday. Weekly close live stream. We haven't heard about Monero in quite some time. The last big event, which we can talk about, is this big dip we had back in February, which was several months ago. And like anything that works out, you always wish that you'd just gone completely balls deep into it. I sort of dipped into it a little bit, teabagged it. I already owned. That's never mind. Nobody knows if you own Monero or not. Maybe I shouldn't give that away. But I've been very interested in Monero for a very long time. So real quick, what is Monero? What is it as far as a cryptocurrency goes? It is a privacy-centric cryptocurrency. Won't get into all the technical details, but the difference between it and Bitcoin is that with Bitcoin, it's an open ledger. Anyone can see the transactions. Anyone can see how much money is in every single wallet based on the public key. Monero, none of that is possible. I sound like I'm shilling Monero, but that's because I kind of am. I've really always liked the aspect of privacy in crypto. I think that's kind of why people want to get into it is for the privacy aspect. And over the last few weeks, it's just been going off. I mean, let's see, in the last since the beginning of May, as of today, it's up 42%. And meanwhile, in the same time period, basically Bitcoin is up. It is definitely up, but a little bit more muted, about 13%. Now, past performance, yada yada yada. I am kind of talking about it here after a big run. I don't necessarily think it's a great time to buy it now because it's basically come. Let's go to my main chart here. It's basically come to the top of a range. Hold on, let me clean up all my indicators and stuff. It's basically come to a top of a range here, and so as a trader, I'm very kind of remiss to buy it. But there's one key thing about Monero that I like that has been demonstrated in years past. It actually outperforms Bitcoin during bear markets. Now, I'm not saying we're going to have a bear market right away. I'm not being a doomer in that sense. But what I found very interesting about the 22 down cycle in the cryptocurrency space, and of course Monero versus Bitcoin has been going down. That's the relative, that's the cross pair. But that's of course because Monero doesn't have an ETF, nor will it ever, because people don't really want Monero to succeed because it is private, and the powers that be, governments and things like that, they don't want people to be able to hide their assets. It's kind of a interesting use case, because that's why the big dip happened. We'll get to that in just a second. But basically, from January of 2022 all the way until basically the end of the year, till January 23, Monero outperformed Bitcoin by about 144%. And as you recall, that was the year in which Bitcoin was going down. Basically it came all the way from, let's see, what is it? Here's about 2022 to here. Bitcoin was down about 66% during its bear cycle. Pretty common for a bear cycle in Bitcoin. Anywhere from 70 to 90% historically is what Bitcoin likes to go down. But if you notice, Monero, while it is volatile, over the last several years has remained a true actual kind of store of value. And then this last little dip, which in the grand scheme of things looked kind of inconsequential if we go back all the way 4 years now, 5 years, that big dip was due to Binance delisting it from their platform. I remember when I saw that happen, it was a giant dip of, what was it, about 37%. That's pretty catastrophic in the percentage terms wise. And I was like, oh, what happened? Because at first I was afraid that the privacy features of Monero had been compromised. In other words, someone had discovered a hack. They had been able to make it not anonymous. In other words, you could either see the transactions, you could see the money that was moving or the amount that was moving, you could see how much was in wallets, any of those things that Monero is secure about. I thought one of those had been discovered, and I was like, well, I guess that's it. But then when I read about what exactly happened, it was all based on the speculation that because people couldn't trade it any longer on the largest by volume exchange, Binance, that was a bearish sign. But really, if you think about it, the reason they did that is because, I think that, was it the, I don't remember his acronym name, but Binance is basically being forced to play nice with the U.S. government. Because I think even their founder, what's his name, has he's going to jail, I think, actually. So yeah, what's up, Stone Pilot? So yeah, and so I basically that dip working as intended, in that it was being delisted for being too private, in that they could not report on people's activity. Yay. And so, again, like I said, when I saw that, I immediately went and, got more interested. And yeah, I mean, it would have been great to have gotten even more interested as in all things, but still, it is what it is. I am conservative as to a fault. And yeah, so now here we are back up at the top of this range. I don't think it's necessarily a good time, but I think it needs to come back on people's radar because basically, if it comes back down to the 140 area, that's always kind of been like the kind of settling point for Monero. And you know, the prime criticism I get from people when I talk about Monero is in the cryptocurrency space is, well, I look at this chart and I just don't see like giant runs. I don't see huge parabolic moves, and like basically the criticism is win Lambo. And to that I say, no one's ever going to know how rich you are, Monero. And so that's really what I kind of want to highlight today because yeah, it's I mean, like all things, there's no better advertisement than a rising price, and it has been going on a tear. And I kind of touted it to one of my chats today because it was down. It was still positive today when Bitcoin was down, but now that has kind of flipped a little bit. Bitcoin, we'll look at Bitcoin and Ethereum because I got some updates on those we got to talk about. So what's been interesting, and this, you guys can kind of note this if you're trying to day trade it, every Friday, or it seems that way, last 2 Fridays at least. So Friday there, and then, yeah, Friday, May the 31st, and when was the Friday before that? Basically, Thursday, Friday. I was a little bit off there. But essentially, you can notice a very strong correlation with the stock market and Bitcoin. It has definitely returned to high levels. I think last week I posted a chart where it was at about a zero point 0.6 correlation, one being the highest correlated. It may be even more because, I mean, essentially, if we just take a quick look at, let's say, the 5 minute of Bitcoin sold off at 1125. I don't think that's what the stock market did today. No, stock market was pretty much bullish. Stock market, by the way, making new all-time highs this week. I think we're just going to grind higher. But let's finish talking about Bitcoin. So one of the things I was looking at with Bitcoin, like all things, it's getting really uninteresting for now. But at some point, price abhors a consolidation, and it's going to break from it. I have different opinions from different people, but I'm looking at really the support, basically the 50% of this recent kind of move up, 64 to 30. That's what I think is going to be. And then let's look at the volume profile for our current range right here to see. The main support, of course, is going to be the next big support to hold it up. If it does break that low, is going to be the 51. Probably test this low again at 56. But basically, the volume profile of this entire consolidation was broken today. And so that is going to lead me to believe that over the weekend, we're going to kind of trend down to 64 to 30. And the next level of volume profile support is going to be at, which has been a common level, 62. Let's call it 63, 62.9. So those are going to be kind of the key levels. And then if it breaks that, we've got one down here, small one, 59 to 57, and then down there at the bottom there. And so those are going to be our supports there. Again, a lot of people got really excited, bullish about 2 weeks ago that this thing was going to finally pop off. But, you know, I'm of the opinion that if it was going to go, it should have gone. I don't want to pop anybody's bubble that Bitcoin is going to be, this is going to be the year of Bitcoin, but this is the problem. I was having a discussion with another guy in finance earlier today. A lot of people, myself included, are responding to the stimulus, like any organism in an ecosystem, of the environment. And that being the 5% risk-free rate that you can get in just parking your money in a cash account and just not worrying about it. I mean, it's 5% is kind of like meh, but there's no risk involved. But whereas everything, whether it's Bitcoin or the stocks are at, or real estate or anything, are at all-time highs right now. So what do you do? And that's a question I keep asking myself. And I just, my gut keeps coming back to me, patience. It really is. You just got to kind of ride things. Now, that doesn't mean there's not opportunities. I did actually pick up some Tesla this week. Kind of looks like it's been a little jumpy today, but I managed to pick it up about, I think, 168. And that's because it was at this 50% level. Picked it up on Tuesday of this week. I've been looking at Tesla, wanting to get some more. for quite some time now after, this big dip, because it has kind of stabilized. Now, I'm not being quite the doomer that I once was, where I said, oh, well, we're going to have to come back and test the 100 range again to really flush people out. We'll see. We'll see. I'd like to see this thing get trending. It's getting close to an Ichimoku breakout. In fact, we've basically got the line in the sand right now. If it can break Thursday's high, that's going to be really good for it. That's going to be really, really good for a breakout, because it's got a little spike indicator there. That is, if it breaks it, that's a very high probability. That's actually good. I actually had not looked at Ichimoku overlaid on it. I knew that we hit that support at 168, but yeah, that's actually, if we can break 192 in the near future, that's going to be really good for Tesla. That is actually, as a matter of fact. How close is Bitcoin? I need to go back. Okay, so Bitcoin on the Ichimoku analysis. By the way, we're going to talk about Ichimoku for profit taking. Here I had a question from Stonepile. Well, not a question, but he questioned me earlier with a good example. We're going to look at HII as an example. This is going to be our teaching moment of the live stream, because I love getting questions like this, because it gives me an opportunity to kind of let out the knowledge that I've accrued and the useful things I can share with people. That's why I do these live streams. By the way, we do this every Friday at 4 p.m. I try to crowdsource ideas, so if you have symbols that you want to look at, post them in the chat for the second half of the live stream. So Ethereum, I made a post about this about 2 or 3 weeks ago. This was after the ETF got approved, and I got to do an update on it. It's not going well. It's not going well, because basically what I identified was the fact that there's this big pump up in the ETF being approved, or at least there being an approval that an ETF could in the future exist. One has not been launched yet, but that created this sort of little bracket between those little spikes of volatility, and it did a fake out to the upside. We're looking at a 4-hour right now, and it did poke above it, but could not stay in there. That is one of those kind of little lingering false breakouts, but definitely was a bear sign. Now we pull back to 34.18, which is a 50% level of that kind of ETF hype, and it's not looking too much like it's going to hold it. So things are actually looking pretty bearish going into the weekend, both Bitcoin and Ethereum, and frankly, in terms of a pullback, Monero as well. But like I said, Monero is something where it's more just a anonymous store of value. So that's what you kind of have to think about it as. And so I really would love for this thing to get down to 140. I would be really excited for it to get down to that range again, because that's just kind of like a fair value, as it has been for like the last 3 years. So AMD, sure, we'll definitely look at AMD. We'll kind of jump into it real quick, as a matter of fact, because let's see. I wanted to talk about Monero. I've done that. I want to do the example. Oh, and we're going to talk about corporate bonds. Let's do a quick AMD right here before I kind of go into corporate bonds. I'm not going to spend too much time on it, because I'm still kind of just now exploring the options. But I kind of want to go through the things that I'm looking at on a weekly basis to give people ideas, because that's what I think can be helpful right now. Because I too am kind of just grasping around at all-time highs for opportunities. I mean, I love pullbacks. I want to get things at a deal. And right now, the best thing to have done is just to kind of own things, shares of things. Again, I've kind of moved more towards owning shares rather than options, because there's just a lot less work, a lot less to worry about. I think someone was talking about picking up some Tesla calls this week based on that support. I'm like, I want to own parts of the company. I want to Warren Buffett Tesla. I want to have this for at least a decade. And I don't think you can maybe get 4-year options, but I don't think there's 10-year options. Maybe I'm wrong. Maybe there are. But still, I'd rather just own the shares. Just, Elon, his compensation package got approved with about 73% of the shareholders approving it. There's a little bit of snark in the media about that, because I don't think they like Elon Musk, and I don't think they like it that he keeps winning. But you really shouldn't bet against Elon. Anyway, AMD, looking good, slow like all things. That's what I got for you, Jeremiah. I mean, I've got the trade laid out right here. It's up a little. It's not mooning, but like all things, I mean, things are just going to be kind of slow. We're going into the summer months. You just kind of have to lower your expectations for the kind of moves that you're going to see, especially since this week you kind of had inflation data come in at roughly about what people thought. Um, the Fed, again, not planning to change rates. I read different people's interpretations about how the Fed is more hawkish, whatever that means. But you know what? People, you got to remember that the media, the financial media, has to talk about something every week. They don't use technical analysis like I'm doing, so I can use different charts. They need to like speculate on what the Fed's going to do. And everyone is constantly speculating that at some point the Fed is going to lower rates. And I've just already assumed that they're not going to do that. Number one, because they said they haven't. And number two, because 5%, if you go back 15 years before this, current, money printing recency bias that we have, 5% base rate, 7-8% mortgages are normal. I've just gone ahead and assumed that we're going to be at these rates for the next 15 years. That could change. But the contrarian opinion now is really things will not change. It's a weird thing to be contrarian about. But when I see all the media talking about like Fed's going to lower, Fed's going to lower, let me tell you a little anecdote. I've avoided getting into an issue with the last real estate property that I purchased where the mortgage broker was trying to talk me into an adjustable rate mortgage, and basically you would get I would have gotten maybe like a 4.5%. This was in 2022, the beginning of 2022. I would have gotten maybe like a 4.5% rate, like a pretty good rate, maybe 4 or 5% rate, if I had taken an adjustable rate. But then after I think 9 years, it would have gone up to the basis rate. Or I could go with the fixed, which I did for like 5.75. Small things, but it makes a big difference in your mortgage payment. I went with the fixed. I didn't take that risk because he assured me that in about 9 months, this is in 2022, by the way, in about 9 months or so, the Fed was going to have to lower rates. He sounded very confident at the time, but it's just my spidey senses were triggered by that, and I was like, no, I don't think I'm going to take that bet. And I'm glad that I didn't, because in a few years, not too short of years, if I held on to this property, which I live in now, actually, I would be facing a very much higher monthly payment. And I don't want that. I like to have it fixed. So I'm good with my 5.5%, 5.75%. Anyway, less about me, more about charts. So let me jump into GME. Oh yeah, let's just talk about GME. Has it mooned? I read today that Roaring Kitty just bought millions of dollars worth more of the stock. I presume that's because his options are going to expire next week, and he's really trying to drum them back up. I think that he has an trend. If I recall, just from memory from last week talking about it, he purchased some 20 options, June options that expire next week at $5.60, somewhere around that. And so his break-even point is about right here. Is it about like 25.60, let's call it. And so, yeah, he is only about almost 10% away from going into the red on those options. He has his. I remember seeing this sheet. Of course, we're just assuming that nobody on the internet lies, right? We're just assuming that. Also, he has a average buying price of the shares at $20 a share, which makes you kind of wonder why he's sitting at that after this is the run here. I just don't think that this is a really great trade. I think that this is more this right here is going to be all that you get. That's going to be all that you got if you bought it on the 14th, May the 13th and May the 14th rally. I mean, this pre-earnings hype, it's pre-earnings, it's a big pump after a bigger pump. That's what you're going to get in these kind of patterns. I mean, it's just even in GME, the same thing just kind of repeats itself. You got the big pump, you got the little pump, you got the little pump, then you got little pump, little pump, little pump, little pump, and little pump. I mean, these things just happen again and again. And oh, there's a little bit bigger pump, but never really got up to that point. And again, I think when I did this last week and I charted this, oh yeah, I don't even have to do a 50%, but just to validate it with the retracements indicator, basically 50% of this whole move down basically came to that point right there. So it basically came up 50%, could not breach it, could not close above it. To me, that's done. To me, that's done. So yeah. If you're doing this for fun, that's great, but it's just it's not even last year's meme. It's the meme from 2021. I mean, what do you expect in here? You know, lightning kind of strike adjacent to you, but it's not going to strike twice in the same place, or so I'm told. Puts, you're not going to be able to buy puts because let me pull up my let's see. The reason you're not going to be able to buy puts. Let's look at the IV. You know, the implied volatility of these are going to be atrocious. Oh, fark. Oh no. Oh no. Oh, there we go. Okay. Whew. Thought I lost the window. Yeah, the implied volatility. This is Thinkorswim I had to bring up here, which by the way had some problems this week. A lot of people aggravated with Schwab buying them out. Weren't able to log in on Tuesday this week. Got some people really frustrated. I really wish they would do more with the software, but I don't think they're going to advance on it. But the main thing I use it for now is this indicator that I have. That I didn't make it myself, but I adapted it myself to color code. But this basically shows me the implied volatility as kind of a color coded thing. TLDR, it's getting close to average again, but it's still higher than the baseline average, as it has been for the last 252 trading days or last year. So it's believe it or not. I mean, if you really want to be dangerous, I bet selling calls would actually be the thing, but I don't recommend that. That's kind of dangerous. It is still dangerous, but you could buy puts. Actually, you know what? To answer your question, no, it's not. It's not horrible to buy puts. What would have been really actually kind of bad would have been to buy puts on 514, because that's when implied volatility was super high. In fact, let me just kind of use that as kind of a teachable moment here, because that's something I think people need to kind of understand, because people are just traders are all about just trying to quit flipping buy and sell options as sort of lotto tickets. I guess that's fine, but you need to understand how these products work. So what I'm going to do is I'm going to go in Thinkorswim here, and I'm going to do a think back. Think back is where it is actually kind of valuable, because we can look at option pricing going back, and we can see. So let's just go back to May the 14th, and let's just say that you wanted to buy an option. Do I want to degen and do May the 17th? No. If someone put a gun to my head and made me buy a put that day at the closing price there, I would have taken it out to June. I would have basically gone against Roaring Kitty, so the June 21s. So let's see. Let's say that I'm trying to be kind of cheap, and I want to buy like the 10. Do I want to buy the 10 puts? Where's the $1? All right, say we do the 15 puts. We buy the 15 puts for, $1.15, okay? So that's because implied volatility is really, really high. And then let's go forward and let's see what happens as the days go along. So if we go to basically where it tanked all the way down, what day is this? This is on 5/17. So let's go 5/17, 3 days later. 3 days later, how much money do we make on a $100 investment? $8.50. $8.50. We made 8%, taking it from here all the way down to here. Why? Because of this. Because of this massive drop in implied volatility that happens. That's the power of IV, to destroy a great YOLO that one might think they want to take in puts. It's just not worth it. It's really not. But have fun. Have fun doing it if you want. It can be exciting, and if that's what you're trying to do, get some excitement, that's fine. But I like to focus on things that have an expected return, that not being just fun, actually having a monetary ROI. So yeah, SPY ZT0DT is more exciting. Well, it's also probably more useful because you're just basically trading delta and you're using it as a proxy for the SPY. But I think you could probably do that with futures as well. All right, so yeah, let's take a look at HSY, and then I'll start looking at good to see you, coffee. Hershey's. I'll start taking a look at some other things. So we got the COVID low down here. I'm still on the weekly chart, and I bet we're kind of coming and hovering around the 50%. Yeah, it's just kind of dancing around this 50% level. I'd be comfortable owning it, maybe even taking an investment out on it at this kind of this equilibrium it's found at the 50%. Let's see if we've got any volume profiles that it's holding or threatening. That's probably down here below. Yep, right where. And again, going back to the cheat code of the markets with volume profile. Let's see how perfect we can get this to see if it really matched up. I think it might have. No, wait, hold on. The highest point of that little peak is basically right there, and oof, almost perfect. Did we look at this a couple weeks ago, Coffee Guru? I don't know. But yeah, that volume profile level right there at 178.80, that is what captured it better than just the 50%. And then of course on the top side, it's been caught, and this is all volume profile based on the leg up. Okay, and so yeah, now you're just basically caught between these ranges of traders. You got the traders on the upside at 205, and you got the traders on the downside at 178, and they are defending their positions. And whichever one wins is where it's going to go. So I would not want to have this. I'd put my stops below the 178. But it's looking good and holding right now. That's pretty good, actually. That's pretty good. So Hershey's actually, I wonder how affected it is by cocoa. Is that kind of a coffee guru? Is not just coffee that you're a guru of, or you also a guru of cocoa? Because I remember cocoa futures was kind of a big oof. Look at that. Well, that was a pullback, and it looks like it's starting to moon again. Wow. I don't know. This is above my pay grade, beyond my expertise at what long-term high prices of chocolate, cocoa, are going to do to Hershey's. I imagine Hershey's is kind of diversified. They don't just sell chocolate. They sell sugar, just basically sugar. I don't know. This is speculation I'm not qualified to make, but that's the first thing that I think of is, what are their input costs as far as their business goes, and maybe this big run up happened starting in basically January of this year, and yeah, so this. Basically, is the price of Hershey's really hasn't kind of reflected one way or another. In fact, it's just kind of hung out. So the stock doesn't seem to care. So, yeah, I don't know. But right now, it seems to be kind of holding, and it's better than going down. So that's Hershey's right now. Oh yeah, this is a hot tip, by the way, that I shared with some friends of mine. Don't read anything into this, but LSD. This is Clearside Biomedical. This is I don't do hot tips, but a buddy of mine from high school. It's basically a company based out of Georgia here. He has, as a client, he has somebody that works there, and they didn't reveal anything. But basically, here's the deal. Here's the deal on this. So it's like any other penny stock, just like GME or anything like that, where you can see that it has, some nice yeets from time to time, every few years or so, and it's been sitting around its baseline for a while. Basically what they do is they make some kind of needle that goes into your eye, does a very specialized eye surgery. That's what they do. As far as their financials, I don't know, but from us purely, if I am going to buy a lotto ticket when it comes to shares, because I'm bored, as I am and many people are right now, as far as opportunities go. This would be something I would, because you have a shot to capture some kind of a big move from, I think, what was it, 120 that I picked them up today, all the way up to, let's say, $5. Yay. That's a 200, 300, 400% return. And so that was one thing I did this week just for fun, and I have no, I put no guarantee behind it. This is hashtag really, really not financial advice. So it's at a giant. Yeah, you're right. It is actually at the point of control for this consolidation here. I did notice that too. The point of control being at about 136. And so yeah, I mean it's basically just hanging out, and that seems to be a level. At some point, maybe we'll get some kind of a pop. But I mean, hey, this is $1.20. You can't even buy. I mean, you can't even get coffee with that. But yeah, that's basically my fun ticket for this week. So, all right, I promise I want to talk a little bit about. I want to circle back on public.com, because I found another way to degen on there, and I say degen kind of loosely. I mean, I do expect to make a return, but actually, let me pull this up. Different things. Hold on, let me pull this up. So public.com I talked about last week. It is another brokerage, except it has Jen, how would you describe it as being different from anything else? I mean, you can do fractional bonds, you can do crypto. It's got a couple of interesting products out there, but what I really kind of got interested in, you can do this probably on a Schwab account, but I gotta admit they do a little more user friendly, is bonds, and not just treasury bonds, but corporate bonds. And so I got really kind of interested in looking at these things, because by the way, guys, corporate bonds are kind of known to be very risky. And so you really need to, it's not that you can't and shouldn't, but you need to know what you're doing. Basically, you're buying debt of a corporation, okay? And this is not their shares. Now, sometimes in some examples, and I don't know if these are applicable here, sometimes their debt will, at the maturity, convert into shares, but we're just looking at these that are just paying a yield like a bond. In other words, an interest that you're going to own or you're going to earn by going through these. I just kind of want to walk through this and kind of explain, because there's some kind of interesting things that I saw here. Here we got some of the top players. These are obviously selected for us. But basically, if you want to buy the debt of NVIDIA, you can basically get a yield of about 4.98%. It's pretty good. And then the maturity on that is, wow, that's all the way out to 2060. See, that's actually kind of intriguing, because you can basically technically here, you could lock in a 5% yield by buying NVIDIA bonds for 36 years. Interesting. Let's talk about bonds a little bit. So the price is what you're going to basically pay for it. And I think these you can do fractional shares. So basically what you could do is you could just buy, no, actually it means that you need to own minimum quantity 1,000. Okay, we can't buy that. So sorry. In order to do this, you would need, no, 1 times 1,000. Okay. Yeah. So basically your minimum investment, this will be $813, not $81 million. That's much better. But yeah, so you would buy a fractional, I think of this. Yeah. Now normally a bond is priced, the par is 100. But as you see here, the price on this NVIDIA bond is at 78.68. The reason is because the coupon at 3.7%. You can now buy bonds at 5%, just coming out fresh off the money printing presses of the Fed. And so what happens is the par value, the price of bonds, goes down to make them competitive with bonds yielding that certain percent. Here's another example, the counterexample to that I saw today. Philip Morris, their bonds are yielding about 6%, But there, wait, where was the one I was looking at? Oh, here we go. Here was a coupon rate of 10%, which I'm not sure. I'd have to look into more details when they first started selling them. I think they started selling these in 2019. So this was a 20-year bond. And of course, in 2019, they had to, I think they were in some bad straits, and they had to issue debt at 10%. And so now that the average, not the average, the base rate is 5%. That's why you have to pay $140 instead of $100, because you're not getting a 5% coupon, you're getting a 10% coupon. And so the bond market kind of evens it out that way, to the point where now if you buy it at 140.56, the forward yield, the yield to maturity you're going to get is 6%, because you're paying more to get 10%. Does that make sense? Does that make sense to you guys? You're basically paying $140 instead of $100. Essentially, you get, if you bought a 100 par value bond at a 6% yield, this would be the same amount of money you would make over the years as this 10% you make off of an initial investment of 140. Hopefully that explains a little bit better. But yeah, so I've been kind of interested. I actually kind of degened a little bit, and what I did this week, just to kind of dip my toe into here, is I purchased, rather than going into some meme stocks myself. Where's what I have? Why can't I just click on it? AMD. Oh, here we go. AMD and Lumen. So I got an AMD, which who cares about that? That's basically yeah. And then Lumen, which I think is a tech company basically. This was a 12%. So I basically went for super high yield, because it's a huge. I consider these to be very risky. And so I went for, I think, a 12% yield on that, and then the yield on AMC at 16%. So this is my version of degenning and buying lotto tickets. I know it's not nearly as exciting as looking for a multiple X move, but it still is a high risk but high return, as far as, if you think about it over the life of the bonds. Now, as I was looking at these, going into here, so let's do a couple. Let's look at, first of all, fractional corporate, so that we can kind of get into it at low values. We've got them sorted by minimum yield of, I want a minimum yield of, let's say, 6%. And then we're going to sort these by yield going down. Look for anything. So beyond meat, you can get a 70% return. I'm not going to touch that. Although, that's a thing. That is a thing. If you really kind of, what's interesting is it's a 0% coupon. That's kind of fishy. Liquidity is going to be kind of interesting, by the way, because that's going to be determined how easily you can get in and out of these. So I would only really want to do things with a high liquidity. The rating is going to be your own rating. These are the agencies that rate it. They're all going to be bad. You're basically just betting, is this company going to pay its debts? Now, the company, the difference between owning this and share prices are, the company doesn't necessarily need to go out of business in order for them to default on their debt. They could just decide, we can't pay it. We're not going to make good on our debts. And then at that point, basically you hit the worst case scenario, where they default, they don't make their payments, and their risk is that their credit rating goes down and they won't really be able to issue debt again. So that's the kind of reason that they're going to try to stay in this particular market. But not too many options here. But oh wait, we're not. Let's get around to kind of the normal range. Let's get down to like the under 10%, because a lot of these things are kind of. There's a lot of energy companies. Oh, there's one I saw right here with Duke Energy was actually kind of interesting as a kind of a middle ground. Yeah. So I mean, Duke Energy. These are all coupons. Here, by the way, you can kind of see here in one screen how bond valuations work, because I know sometimes it can get a little wonky, but notice how you have a yield of You have a yield of 7.55%, a coupon of 3.25%, and a price of 90. Again, the base rate is about 5%. And so that's where you're going to get what you see is what you get. So a lower yield than 5% means the bond is going to be a lower price. Bond valuations go down. And so right here, this is probably a more recently issued security. And that is a coupon of 740. Price is real close to 100, and so that means that the yield right now is about 6.9. So that's kind of interesting. I actually, the next thing I'm probably going to buy next week is one of these Dukes, because this is kind of more reasonable, I guess. And again, what's the difference here between this and a 5% in a money market account? Well, the difference is that these you can actually lock in for a very long time. And so as long as you bet that the company is going to stay in business and pay their debts, for instance, you can get a 7.5% yield all the way out to 2082. I don't think I'm going to live that long, honestly. That's being very optimistic. But maybe you can pass this on to your heirs or something like that. Again, it's only 7.5%. Stock market, on average, yields about that much. But these are just some ideas, some things that are worth playing around. I think that people might be interested in, because I'm interested because, right now I don't see any major pullbacks on stocks or things to buy. And so being able to kind of take cash that I have and put it into, things that I know are going to get a good return, kind of an average stock market or better return going into the future, especially if you can lock it in for the far future, that's pretty good, because at some point the stock market is going to pull back. And at that point, if the liquidity on these things are good, I can sell these bonds, get cash, and then buy stocks. That's kind of the play that I'm looking for here. And so that's what I've been doing this week, actually. So very, very boring. Will it to me? Well, I mean, I'm sorry if it's boring, but this is the kind of stuff I'm interested in. I mean, it's the kind of get rich slow kind of approach of things. So, all right. Well, that is anybody. Okay, so we're in the last phase of the live stream. So if you guys have got some symbols to look at it, post them now, because I've got a date with the lady. It's date night, and so I'm getting kind of hungry. So yeah. Otherwise, I'm actually going to sit here and I'm going to look at some more of these, because I'm really weirdly attracted to these. Last week I really kind of poo-pooed these right here, because I mean, they're not that exciting. You're making 5%. People want to hear about YOLO stuff, but that's not the kind of stuff that I look for. I really am more concerned about wealth preservation and wealth growth, instead of taking this this one trade here like a GME and trying to moon it, and then what do you do after that? Ford, 5.88% maturing. Well, that's next year. That's actually this year. So HPE, sure thing. Truist, 5. Let's see, maturity. One thing. Let's go for some old maturity here. 21, 22. Washington University. I don't know if I'd actually bet on. I actually don't know if I would bet on universities being around in 100 years. Actually, this is kind of interesting. Okay, so Norfolk Southern, are we going to use railroads in 2118? I don't know. I'm not going to be around. But, these are interesting. I mean, really, the maturity is when these bonds end. Now, they can reissue their debt. In other words, they can call their bonds. That would be interesting to see. And the reason they would do that, in other words, basically give you your money back, and then they would go out and reissue the debt at a lower interest rate. But again, like I said, I've presumed that 5% basis rate is what we're going to have for the next generation, basically 15 years. That's my speculation right now. The risk comes in, of course, if the Fed raises rates, okay, which is kind of almost a black swan event at this point that no one in the media is talking about. But I think people are just so focused on they have to lower, we have to go back to easy money. If that happened, then the money that you put into bonds at these coupons and these rates is actually going to go up. So if the Fed lowered rates, as everyone says they're going to do, whatever money you put into bonds, corporate treasuries, everything like that is going to get jacked up. It's going to be worth more overnight. So I just, for some reason, I'm just really into bonds at this point in the market. Not crypto, not stocks, not real estate. We'll see. We'll see. That's just what my gut's got me looking at. The TFC one. All right, I tell you what. I will. What's with the TFC one? You know what? Probably I can do. Ooh, 12.83%. Maturing in 2029. I do have a soft spot for TFC. I like it. I think that probably next week, when the market opens with these next $2,000 I put into it, I'm going to buy 1,000 of the TFC and 1,000 of the Duke, and then we'll go from there. I'm going to have to dig more into this actually. All right, HPE. Well, I did look at it. I did look at it last week. It's just those are just the only things that I did. So, all right, HPE. Hewlett Packard. Okay. Hey, looks like it's doing pretty good. Is it Hewlett Packard that we're looking at, Nerksum? I mean, don't know what to say except it's got a solid breakout. You got a nice close this week. This is a weekly chart. Above that high at 20. You're good. This is good to go. I mean, I don't see. I mean, when something's trending, yeah, it goes. Oh, that's right, Stone Pilot. I got talking about my other things, but this is like a. I'm going to presume, Nerksum, that you're in this long, right? You bought this. You're good. You're good. And then right, yes. And the reason I'm going to say that is because I know that Stone Pilot, he posted a good question in the Discord, by the way, links below, to talking about this Huntington Ingalls industry. And want to kind of quick touch on that. Yeah. So, all right. Well, this can be useful for you too. So, my favorite long-term indicator, long-term in terms of what I've been using for a long time, over a decade now, is Ichimoku. When you see my charts, you'll always kind of see this little red line. That's the Tinkinson. That's when I use my retracement indicators. My retracements are all based on 50%, 50%, 50%. Because, man, price sure really does like to hang around and respect that level very, very frequently, very, very frequently. And Ichimoku is based on 50% retracements. It's basically actually four separate lines that are all based on different time periods, 50%. And it's very useful for something when it's trending. Now, Stone Pilot, he got into this trade, I think a lot earlier. I have to go back and look and see. But basically, he was able to capture a big earnings cycle trend. In other words, you had earnings in November of 2023 that kind of popped it into this trend. How do I define a trend? Well, a trend is very easily identified in Ichimoku when price and momentum, the Chikou, are on the same side of the cloud. And that's basically what happened. You had a cloud breakout back on earnings there. And it's kind of hard to buy something because, if you're looking at just this chart as it is, you're at a high. It's kind of uncomfortable. But you have to think in terms of, well, what's possible? And you get that little pullback there, but then this thing just starts to really trend. And the first line in Ichimoku that I look at to contain a large trend is going to be the Tinkinson. That's the red line here. And that's going to be the 9 period, but sometimes it does break below this level. Now you could take profit when it closes below that red line if you really kind of really keep things tight to the chest and not give up any as much more than you have to. But the next level of support, the next level of dynamic support is going to be the green line, which is the Kijinsen. It's the 26 period moving median. And as you see, that's kind of the next level that a price will tend to really kind of dance around. Did I lose this? Okay, there we go. All right, thought I lost things. And so those are basically the two basic things on a major trend. Of course, this is a daily chart, so this thing's going, 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 going. Yeah, another good earnings, obviously. And then we have a little thing. Now, I have this spike indicator that I made. There's nothing fancy about it, but basically tries to detect when you have some really unique volatility events. Stone Pilot, he's listened to me when he talked about how I've said that basically if you don't see a spike that's not at a support or resistance, then that's kind of one to discount. 4 new trades. The thing about this unique about this event, this spike that's happening, it is happening at an all-time high. So you really don't have a resistance, do you? But if you are sitting in a trade from all the way back here, you're up on the stock, let's just say 30% over the course of, just a couple of months. At that point, when you see some event like this, that should kind of give you a little bit of a warning. And so when you see some sort of like a blow off like this, essentially, price shoots up and then within a bar, it gets sold off again, back below that Tinkinson, back below that red line. That's your first sign that, something's going kind of funky here. Hindsight, but going forward, these are the kind of things that you want to look for here. And in the case of a big bullish trend like this, when you see a blow off top, I wouldn't necessarily go short, but it's definitely good for taking profit. But let's say we didn't do that. So in that case, the green line close below the green line is going to happen somewhere right around here. And we're kind of in this little consolidation period. Price is not trending as bullishly as it was. It is just as correct an answer. Let's not think in the past. Let's not think in hindsight. It is just a correct answer to take profit as it was in January, as it is here in March. Because there you're kind of seeing it the momentum's kind of fading a little bit. Actually, Chical, which I often refer to as momentum, is getting close to price, meaning the momentum's getting weak. And that was another one. Now, as it goes along, you start to do what I call an Ichimoku cloud pullback. Now, this is actually normally a pretty decent place to kind of buy a bullish trend because that flat part of the cloud is being created by a 50% retracement of this leg up right here. That's why I came to look for 50% retracements, because that's what Ichimoku is based on. It just kind of draws it for you automatically, but only when the conditions are within those set parameters, in this case 52 bars. So within these 52 bars, give or take, this is what identifies a trend, and so that 50% is at 276. And so it kind of hangs out there for a good number of days, couple of weeks. But then you kind of run into this little thing that happens on every stock for 4 times a year, and that's earnings. Now, earnings are a double-edged sword. I don't trade around earnings. A lot of people like to do that because they're fun. But I like to make money consistently, not try to have some fun, unless I'm talking about the other things I talk about. Ignore what do as I say, not as I do. But I don't trade around earnings. That's one thing I don't do, because a good trade can just immediately turn into a bad one. There's nothing you can do. It just happens so quick. And that's actually what ended up happening in this case. Because remember, just as the Ichimoku rules to get bullish happened back in November, now the Ichimoku rules happen on earnings to get us bearish. Unfortunately, by the close of that day, you've given up almost half the profits from this trade. And so there's really nothing that you could have done to prevent this. That's just what happens with earnings. That's why I say it's a double-edged sword. Nevertheless, if you just follow the final rule of profit taking in a trend, basically the rules that got you in, with a price and Chical being out on the bullish side of the cloud all at the same time. Now they're on the bearish side of the cloud at the same time. Now if you get out, it sucks. You've given up a lot of your profits, but if you go forward, what does that tell you when that happens? It tells you it's in a bearish trend, and actually getting out at 244 is better than getting out at 238, because basically 238, you're back around break even. You want to get something out of this 6-month journey you're on, even if it kind of hurts, right? Definitely don't go round trip, Oof, don't do that. But just to kind of recap, there are basically 4 examples, and of course the last one not being the best, of taking profit. Basically, you have some sort of a blow off top, a really high volatility bar that closes within the red line, which is just the first of the bullish trend, or any trend basically ending. Then your next is going to be a green line cross, or close below that green line. And then finally, it's going to be an Ichimoku cloud breakout, which would have gotten you into the trade to begin with. And so those are going to be kind of the 3 take profit points if you're playing a situation like this. Kind of as a sort of a little anecdotal, esoteric anecdote. Just get out before earnings. If you're seeing that your profits are threatened, if it could go either way, if you already made money and you don't want to risk it, just close it the day before, because these things do happen. Otherwise, you're just being greedy. And so that was a good teachable moment that I appreciate him posting that in the Discord this week. So you bought HPE during Rona time? Well, everything's gone up since Rona time. Who would have thought the world was ending? It was time to buy stocks. All right. Well, it's time to give it a close. So thank you, everybody. Have a great weekend. I'll be back next week, same time, 4 p.m. Make sure that you click the links below. Do the like, share, subscribe, all that things that people might want to see my content and learn from it. That's what I'm here for, is to teach. So appreciate you, everybody, and trade wisely.